Buying your first home used to feel like a rite of passage. You get your job, save up, and within a few years, you've got keys in your hand. But today, it feels a little more like an uphill battle. For a lot of young people, it's overwhelming, frustrating, and honestly, kind of discouraging. And yet, there are still first-time buyers getting into homes every single month, even in Kansas City. The difference? They're approaching it with a plan, and in many cases, with a little help from family. Hi, if you're new here or we haven't met, I'm Payne, and I move Kansas City. In today's video, we're diving into why it's harder than ever for young people to buy a home, what the real numbers say, and how parents can start helping their kids prepare right now without draining their own bank account. Let's start with a number that might surprise you. The average age of a first-time homebuyer in the U.S. is now 36 to 38. That's the oldest it's ever been. Just a few decades ago, it was 29. So what happened? We're seeing the impact of multiple factors happening all at once, the perfect storm. Student loan debt is massive. Rent has skyrocketed. Wages haven't kept up with inflation, and housing prices, especially in certain pockets of the country, have jumped faster than a lot of young people can save. Even right here in the Kansas City metro, starter homes in areas like Lenexa, Shawnee, and Olathe are creeping up into the 300s. That's a tough entry point for someone who's still early in their career. Now, I know what some people might say, well, they just need to save more and stop eating out and buying Starbucks every day. But it's not that simple. When you factor in student loans, credit card debt, and 7% interest rates, even someone who's doing everything right might still come up short. So where does that leave us? This is where parents can play a big role, but maybe not in the way you think. You don't have to give your kids $50,000 to make a difference. In fact, most of the time, the biggest help comes in the preparation, not the purchase. So if you're a parent and you want to help your young adult be ready for homeownership, here are 3 ways to do it without compromising your own financial goals. First, start the conversation early. Talk about credit scores, debt, and what it actually takes to qualify for a mortgage. Most schools don't teach this stuff, so it's up to us. Second, if you're in a position to do it, co-signing on a loan is an option, but it comes with serious responsibility. Your name is on that debt. That means their financial decisions will impact your credit. This isn't a decision to take lightly, and it's definitely not for everyone. And third, consider helping with their down payment in a strategic way. That might mean a gift, or it might mean a family loan with clear terms and expectations. The key is to approach it like a plan, not a rescue mission. Now, let's talk about something that comes up a lot: gifting money for a down payment or closing costs. This is one of the most powerful ways parents can help, but it's got to be done right, or it can create unexpected problems with the loan process. Here's how it works. If you're giving your child money towards their down payment or closing costs, most lenders will require a gift letter. This is a simple document that says in writing that the money is a gift, not a loan, and that you don't expect it to be paid back. The gift must also be properly documented. That usually means a paper trail showing where the funds came from, like a bank statement, a record of the transfer into your child's account. Now, here's what parents need to be aware of. 1, gifting too early can raise questions. If the money sits in your child's account too long before the loan process starts, it can create confusion about the source of funds. 2, there are tax implications. As of this year, you can gift up to $18,000 per person per year without triggering the gift tax reporting threshold. But I am not a tax expert, so talk to your tax advisor just to be safe. 3, lenders have different rules. FHA, VA, and conventional loans all treat gifted funds a little differently. That's why coordination with a great lender and agent is key. Need a recommendation? I'm happy to introduce you to my preferred lenders. Now, one question I hear from parents is this: how do I make sure that the money actually goes towards the down payment or closing costs and not something else? It's a fair concern. You're giving a significant amount of money and you want to be sure it's used responsibly. I recently had sellers set to close on their property, and the night before closing, I got a call informing me that the buyer spent all the money gifted to her and she had no money for down payment and closing costs. Needless to say, we didn't close and the buyer didn't get the house. Here are a few ways parents can protect their gift. First, transfer the funds directly to escrow. Instead of giving it to your child, you can wire it straight to the title company. That guarantees its only use for the home purchase. Second, coordinate closely with the lender and agent. This ensures everything is properly documented and compliant with loan guidelines. Third, and maybe most important, set up expectations up front. Have an honest conversation about what the gift is for and what it's not for. A little clarity now can prevent a lot of confusion later. And fourth, if you're more comfortable treating it as a loan, you can do that too. Just know that it must be documented and it could impact the buyer's approval, so work with a professional to get it structured properly. When it's done right, a gift from a parent can be a game changer. It can help a young buyer avoid private mortgage insurance, lower the monthly payment, and strengthen their offer in a competitive market. But again, it's not just about writing a check. It's about a strategic timing, documentation, and communication. Now, if you're a young adult watching this and you're thinking, well, that's great, but I don't have parents who can help financially, don't give up. There are still options. You just need a strategy. Start by getting clarity on your credit score, your debts, your income, and what your budget really looks like after all your bills. Then start exploring loan programs. There are still first-time buyer options out there that can make a huge difference. I've helped young buyers get into homes with as little as 3% down or even less, depending on the program. But the earlier you start preparing, the more options you'll have. But here's something most first-time buyers and even their parents don't realize. Having the right plan is important, but having the right person guiding that plan, that's what makes all the difference. This isn't just about scrolling through Zillow and guessing your way through the biggest financial decision of your life. There are local programs, lender relationships, negotiation strategies, and even neighborhood-specific pricing trends that most people don't know how to navigate on their own. When you're working with someone who's been through this hundreds of times, who knows how to spot red flags in a contract, and who knows how to pivot when things don't go perfectly, you're not just buying a house, you're buying peace of mind. You don't have to know everything, you just need to know who to call. So whether you're a parent trying to support your child the right way or a young buyer looking for a clear path forward, I'm here to help. If you're curious what your current home is worth or how much buying power your child might have in Kansas City market, check the link below to reach out for a free home value report. And if you found this video helpful, please share, subscribe, and hit the bell for notice on next week's video drop. Thanks for watching, and I'll see you soon.